Good morning. It is Nvidia results today, and they've come out after hours as expected. They're really good, and they're being described as a beat raise. So they've beaten on earnings, they've beaten on revenue, and they've raised guidance. And I think this was pretty much to be expected. CEO Jensen Huang is one of those CEOs who cares about his share price, and he therefore manages expectations really well. And on that basis, expectations are always going to be always kept a little bit in reserve and beaten on expectations with, as I say, guidance upped as well. So the price after hours is up. It's about 4% up. It keeps moving, and it's been up 6% at one point. The share price up about 4% after hours, having been up 2.8% in normal trade. And most of the big tech stocks are up sort of around 1% after hours as well, which bodes well for the US market tonight. And Palantir, which is the mini-me of Nvidia, seen as one of the AI poster boys, much smaller company, they're up about 4%. So I think what this result does is it is going to calm a lot of nerves, and it was a risky moment, Nvidia results, and I think this will probably reduce the chances of some sort of precipitous sell-off in big tech stocks, and particularly AI stocks. But I think it doesn't really change the story much. Nvidia is still a very expensive stock, and all the issues that remain for hyperscalers over how are they going to fund the CapEx, circular deals, competition. But the big one is, will they ever get a return on investment on their AI CapEx? Are people going to pay enough for AI? And those expectations are still very grand and seemingly unlikely to be hit. So those doubts will remain, I think, despite Nvidia having a very good set of results. You've got to bear in mind, Nvidia is the picks and shovels stock selling GPUs, and it's not about AI earnings for them. Ultimately, it is. But they're a fantastic company at the peak of their fortunes, it's got to be said, with all these commitments to build data centers. But ultimately, for the other big tech stocks, it's about whether the earnings are coming, and more importantly, when they're coming as well. So I don't think those doubts have gone away. The market has sensibly sobered up to the AI hype in the last few weeks. Nvidia itself has dropped about 14%, and in the last, if it's up about 4% tomorrow on top of 3%, it's only down about 7% from the top. And if you look at it on a chart, it's not a material correction. It's still in uptrend. So I think this will calm nerves. Whether you would be buying big tech at this point for a reflation of people's wildest hopes, I think that would be optimistic at this point. As I say, the hyperscaler issues remain, and the sector is still very expensive. For instance, from a PE of 42 times, which is Nvidia, and these earnings, there'll be some small earnings upgrades, but they won't change that much. But from a PE of 42 times, the average on the S&P 500 is 22.25. If it ever returned to that, you're looking at a 40% drop in the share price. So I think we're still up there. It's not enough for us to say, let's get stuck back into big tech. We would need some of the bigger questions answered from the hyperscalers regarding when earnings are coming along, instead of when is CapEx coming along. The CapEx we've taken for granted, we've sobered up, we've assessed it. We need some AI earnings. At this point, all the stocks continue to look expensive. So as we look for themes to put a cash into, a strategy portfolio, our MT20 portfolio, which is our real fund, which our members are in, that fund's in cash at the moment. And I think it's unlikely we'll be diving back into big tech at this point. Plus, we've got a few other risks coming up. We've got the data dump post the US government shutdown. That is coming on Friday night. We've got US delayed jobs numbers. And overnight, I don't know whether you've seen the Fed minutes have suggested it's unlikely we're going to see a rate cut in December. It's not appropriate, I think was the phrase. And the odds of a rate cut in December have dropped to 30% from 50% overnight. And they were 100% a month ago. So chance of rate cuts falling away. And that's a bigger thematic for the market, I think, than whether the big tech bubble reflates, which I think is unlikely. So we're just going to spend a few days. We make decisions every morning when we wake up. Decision this morning is good results, precipitous moment less likely, but not excited about diving into overvalued big tech stocks at this point. That changes every day, and the only way you can keep up with that is to subscribe to Marcus Today.